Start recording. Hello, hello, testing, testing, testing. So what's going on, guys? Shall we have a quick look at the charts? Right, this is the DAX 30. Obviously we had a lovely session today around this time, and what I would like to point out is this waltz setup. Point, Jasmine, here we go. So that's your impulse candle, and that is the pause candle. Now, is it going to set up on the M5 or is it going to set up on the M1? So what we see here is the M5 setup. Now apparently it is not a beautiful setup per se. It's not a perfect setup, right? There's no peak of AO and cross of zero line. But actually for DAX, this is a very good setup. Normally when you get a breakout of a range like this, then it goes sideways, this is where you take your trade, and that's your perfect setup too. At the same time, it's a hunt pattern. So if you were trading the M5 and M1, then obviously this breakout and then coming back of it, this situation would create a setup one for you underneath. Let's put lines on both of them, and you've noticed that I put line. I want to inspect this, but I put my vertical line here because when I go to the M1 chart, it's going to be printed at the close of this candle. So let's go there. And as you can see on the cherry candle, we are getting this. So as after the cherry, when you drop to the M1, you probably won't see this. And now I've digressed a bit. I'm not I've disconnected myself from the H1 M5 for this moment. So let's just talk about the DAX on the M1 and M5. But I'll come back to that in a bit because we're going to go through all the charts on the hourly. So today, this is what we actually did. So we went long here. That'll be your standard long. If you're using different, let's say the advanced trade management of stage 3, you probably got out here. You probably don't get in there, but maybe you will. If you did, you probably got out here or here. In my case, I was long here, got out here. Then I got in here, and had an, an add-on based on this is what I wanted to do based on this as well, but then didn't, and it just went. And I think I exited somewhere here. This was one of the best trades, and this one I wouldn't take because now I've seen the market move like 100 points in my favor. But with this profit, I didn't think about it at that time, but with this profit, I could easily have taken a risk here to say go long here 1%, right? 10 points go in my favor, stop loss go to break even. I would have been kicked out here. Now, if I was too committed, I probably got back in here, trailed the candles, got out. But that's not what we did. This was pretty good. And later on, New York session, went short here, exit here, and then this was a very, very beautiful setup one. Usually around these areas you get out. If not, you'll get out here. I think I got out there. Let me just have a look. Quick look. Okay, where is it? Where is it? Is it this? Okay, that's the one earlier. And then there will be one just slightly afterwards. Yeah, something like this. Okay, and that was it. So this trade got loads of pippage. Let me do something. Can we pause this? Here we go. Can you see this? Yeah. This is the M5 chart I showed you earlier. So based on this, actually around here is where you get this, this. So my trades were this, and then up there, and got out after this candle. So there we go. That was really nice. Okay, that looks all right. Let's just leave this chart. Oh, just a quick one. Let's do this for Eric. Now, is this a PC cherry? No, it's not. Why? Let me zoom in. See this? It's not poking out. If this had come down somewhere, like if this was the tail, right? Actually, we can change the color of that to make it look like that, like the tail. If this tail was like this, then it would have been a PC. But guess what would have happened then? Had this happened, as you can see, the low of this candle, and then 2 to the left, those are highs, high lows, and then 2 to the right. So then this would have become a box. The system would have printed a box here. And so you would have, in that case, a stepping up box where you would have one box here. Let me find an example. Oh, there was an example, yeah. So if you look at this one, the one that I pointed out to you, Eric, you have a stepping down candle going on, stepping down box going on. And then this candle breaks or tries to break a sequence of stepping low in an open gator down. So this becomes a bearish PC. But then it immediately turns into a bearish candle. And then the next 2 candles are printed. So this creates a box high. So you have a sequence of a box high, which has a higher high instead of this. So it's against this. But then price doesn't go up, breaking that high. Instead, it continues down. So the downtrend of stepping down, you know, a downtrend is a series of lower lows and lower highs, whereas an uptrend is a series of higher highs, and here's a PC again, higher highs and higher lows. So an uptrend is HH, that's uptrend, higher highs and higher lows, right? Whereas a downtrend is LL, LH, downtrend, that is series of lower lows and lower highs. Or you can write it differently, but that's what it is. Here, this is a PC. So you have a uptrend, high highs, and then this pokes out. I'm not going to look for ABCs in it. I don't look at that because sometimes there isn't enough data in there. It's just a 1 minute chart. And because of that lack of data, this pattern gives us that advantage. Now, if it's on a higher time frame, I can actually drill down to the lower time frame and find out if there's an ABC in there. The reason PC pattern becomes powerful for me on the M1 is because, one, I don't have the data to go to the 12-second chart, and even if I do have it, I know how to do it. It's time consuming. By the time I confirm that, the trade will probably be gone, because it's M1 chart, right? And so when I see this PC pattern, the PC itself becomes a signal for me. And then when there's a cherry on top of that, that becomes a PC cherry. So I would go long here, stop loss here. But even if I didn't go, in this occasion, the box tightened, then this becomes your entry. This is also an example of a setup 2, where everything else is correct and you're waiting for an entry. And then there's a green dot and price just breaks the box and closes outside the box, but not too far from it. And even in the next box, you have this doji. This itself is actually a waltz pattern. You have a trending candle. Next to it, you have a doji, a pause candle. These 2 minutes gave you the chance to actually get in because your stop loss was still very tight by 8 points. And then you just let it go. Let it run. Trail the box. You had a stop loss of 7 or 8 and you got yourself 28 or 30 points. So that's 10 minutes of talking about this. Let's just quickly go to other charts. So this is the UK 100. There was a good chance here as well. Another waltz, a trending candle followed by a pause. Here it's very beautiful because you'll just go and put your pending order there and stop loss below this, because if price went down, it's not probably going to go there. You're not interested. So your risk was just 32 points and then you trailed your candle or had your 2-hour target. That's nicely done. US 30, same situation. You could go long. You also have a waltz signal, a trending candle followed by a pause. And this is a seed, so you just put your stop pending order there, stop loss here, double or triple profit. Australian dollar CAD, it was Australian dollar, again a waltz. Can you see it? It has been. This is the one. So I'm going to put a line there. So this is a trend candle. As you compare it, it's not very strong, but it's okay. And you have a 3-4 there as well. Go to the M15. You have some type of pattern. Because it's already gone down, it didn't give you a nice lovely M15 setup. But if you go to the M30, you can see there you have a setup too here. So you have this green dot, you wait for a fresh box, pending order long there, stop loss below this, about 20 and 40 is the target. Bang. Australian dollar yen the other day was a beautiful setup here around the same time I'm recording this video. New York close. I wanted to talk about Australian dollar, New Zealand dollar again as well. So this is the day one chart, daily chart. A beautiful breakout followed by a 2-candle retrace. Gives us 1 stripe dark bar on the AO. Gives you a perfect cherry. Because it's a daily chart, at the close you can make your entry here and have your stop loss below this. So that would be 50 points. Otherwise, you have your stop loss above there, and then there will be 85 or something, or 80. And then you do a 2-hour target up there. If you had the 50 stop loss, you probably have locked in about close to 3 hours, probably trailing candles. Let's have a line on this, because this is a waltz setup. So you have a 2-bar trending bars followed by 2 pause bars. If I go to the hourly 4-hour chart, we see this. So on the 4-hour chart, you had a strong 3 up by 4 down, beautiful setup that you could have taken on the 21st of April. And then this. Inside that, you have a monarch. So you have a fresh cross, dark bars. You know it's a 3, you know it's a 4. This is a 5 coming in. This is your perfect hunt signal. You went in there, stop loss here, and you probably got out. Run here. Many opportunities. The daily chart is the way to go. Problem is just when it's not moving, people lose their patience and they change time frames. By the time they get back to that time frame, it's gone back to the range mode. And if you're not consistent staying with your time frame, keep changing it, you're gonna pay. This is gonna happen then. USD CAD, yes, there was a strong move today. So the next candle was pause, but I was already in it. If I was not in it and there was this pause candle, and as soon as it closed, I will have my entry here, stop loss up there, 25 something. I think I can plot this one on this chart. Yeah, here you go. Took this here, bang. These are kind of a little bit advanced, not for stage 1, because not everything is right, but I'll keep showing it to you so you guys can learn. What else is there? Okay, let's go. I'm also checking if there is an opportunity. If there is. This was a lovely trade the other day, euro, Australian dollar. At this time, probably a little bit later than this, I looked at the chart. I remember I was so convinced about this, the 3 and the 4, that I didn't want to actually wait. I minimized my risk by going in there with 55 stop loss and took 145. So that is, I don't think it was based on that. Or was it based on somewhere here? Yeah. So I based it on this because this is 1 and 2, and I like to base my target zone on the start of wave 3. So for wave 3 it will be 1, 2, 3, 4, 5. Let's see if I have SNOMS indicator to plot those Elliott wave counts. Okay. Forex widget. Don't think I have it on this one. Okay, so let's go to the next one. This pair actually creates quite a lot of setups, but it's going through a sideways. You have this huge wave 3 up, but when a wave 3 becomes like this, it's like, you know, too spiky and stuff. I don't usually trust it's 4 or 5. It's not the correct sequence. Something's wrong. Hourly is a different thing. This was a good setup. 3, 4, bang. Not much profit, but still. What do we do to this one? Oh, EuroCAD. Unfortunately got out here. Stopped out at break even. So original entry was here. I don't know where that is. I need to plot that. That entry was exited here as well. I think ideally should have stayed in both. But this is a sort of a setup as well. This is a setup 0. Definitely a setup 0. We have a clear 3, clear 4. Setup 0 because the purple is touching this. And usually happens, it means that price has pulled back a little bit more than what we want during wave 4. If you go to the 4-hour chart, you can see a 3 and a 4, and then you have hunt signals in there as well. This was definitely a setup 0 that you don't want to take because you don't have a clear pattern. But still, if you're just in this universe, you would see a 3 and a 4 and bang 5. This is what would empower it. But you see, if I put a line here and go to the 4-hour chart, you can see that's what that purple shows. You have the 4-hour chart gator is sleeping. You don't want that. You want it to be open. That's what gives you the edge. Did we take this? I think there was something here. There was this waltz pattern. Let's explore this. These are powerful ones. If you can keep an eye on it, you can actually take them like this as well. For example, you have this. So you know that market is going up, and then you see this strong move. Momentum is there. The next candle is doji. All right. You just make your entry at the close and have your stop loss here. So you only got like 12 stop loss. So because it's a 12 stop loss, that means you're in the world of the M1. So let me take you to the M1. Whoops. Okay, here we are. And so if you're on the M1, you would take your trade here and your stop loss will be here. So what did we do? I think I didn't do this one. We did it on Euro USD. And we come to that. This was a kind of good setup that you could have taken on Monday morning or the night before, Sunday night. Around here, we took quite a few that night. Yeah, we took the Kiwi here from here to there. I don't know if I can pull it. I think I've already done that in a video, but see. Yeah, that's the one. goes up there. I think in the morning, yeah, around London Open, it exited because it was a strong move up. So there's no other best way to do it. The best way was to just trail the candles because none of these candles have hit the lows. So when it does, it's going to be a change of information, and that was a very good trade. I think we took New Zealand dollar yen as well. Anyway, can't find it right now. Dollar yen today was beautiful. I know there is no cross of zero line here, but this is very close. And you have a clear 3 and clear 4 and a beautiful red dot, sleeping gator, purple correct. Bang, you have 20 pips stop loss, 40 target, you're done. Easy peasy. That's USD CAD again, Swizzy. I think we're running out. So I haven't seen anything to take for tomorrow, but at least we talked about the day. So there we go.